Hello and good afternoon. I'm James Preston reporting to you live from Kalkine Studios. It's lunchtime here in Sydney and you know what that means. It's time for the Mid-Market Pulse. In this show, we'll take a look at the Australian share market performance, the biggest gainers and losers so far today, and the stocks that are also grabbing headlines. Let's begin with a look at the market more broadly. Australian shares were trading near day low by the afternoon amid broad-based sell-offs. The market witnessed stock-specific movement, with investors reacting to earnings numbers, while persistent concerns over rising COVID-19 cases also dampened sentiment. The ASX 200 was trading 0.76% lower by lunch, extending previous session losses. The index opened lower today and declined as much as 0.83%. Today is going to be the power pack day for earnings season, with as many as 18 companies slated to release their earnings report. Some of the big names include real estate investment trust Dexus and Charter Hall, energy firm Santos, financial company Magellan, shopping centres Australasia, vehicle leasing and fleet management services company SG Fleet, and metals and electronics recycling company Sims. Blue chip miner BHP will also release its results later this evening. Shares of appliance manufacturer Breville, energy provider Santos, property firm Dexus, BNPL company Sezzle and financial company Magellan were all trading lower after releasing their earnings this morning. BHP was also down over 1% in anticipation of its earnings report due later today. Moving on to the sectoral front, and 10 of the 11 sectors were bleeding in the red. The financial sector was the worst performer with a 1.4% loss, followed by energy and materials, which both fell by over 1% each. AREITs, utilities, information technology, consumer discretionary and healthcare also witnessed some selling pressure. Bucking the trend, consumer staples extended their gains for the second day, trading higher with marginal gains. On the COVID-19 front, New South Wales recorded 452 new locally acquired infections in the past 24 hours, while Victoria also registered 24 cases. New South Wales Premier Gladys Berejiklian said that the case tally in New South Wales is, quote, likely to rise substantially as the virus continued its spread through the state. Well, with that market overview, let's now turn our attention to the biggest gainers and losers up until the lunchtime break. Global kitchen appliance maker Breville Group topped the losers chart by falling nearly 8%. Some of the other notable losers were Magellan Financial Group, mining firm Lynas Rare Earths, oil producer Beach Energy, and mining infrastructure services provider Mineral Resources. On the winning side, general insurance broker Steadfast Group emerged as the top performer with a 4.2% increase. Some of the other gainers include healthcare firm Fisher & Paykel Healthcare, online retailer Kogan, new and used car seller carsales.com, and electronics retailer JB Hi-Fi. And now, before we take a look at the shares that are in the news today, it's time for a very short break on Kalkine TV. Stay tuned as we'll be back in just a moment with all the latest details on these stocks that are making headlines.
Hi, I'm Sage, and get ready to take the crypto ride with me on Kalkine TV. Watch the Crypto Buzz every Tuesday and join the excitement at Kalkine TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching Kalkine TV.
Welcome back, James Preston with you on Kalkine TV, live from our studios in Sydney, and this is the Mid-Market Pulse Show. Let's now take a look at some of the headline grabbers of the day. Shares of Australia's biggest gas supplier, Santos, fell over 1% despite reporting robust earnings. The company reported a profit of $354 million during the first half of the year, compared to a loss of $289 million a year ago, and its revenue rose by 22%. The company also declared an interim dividend of 5.5 US cents per share, 162% higher than 2.1 US cents announced in the same period a year ago. Santos said that the earnings were driven by higher realised oil and gas prices and an increased sales volume. Moving on, and shares of Westpac Banking Corporation were down 1.5% after the lender issued business updates for the June quarter. Australia's second largest bank indicated a return of capital to shareholders following buybacks and dividend announcements by its Big Four competitors. For the third quarter ending in June, the bank reported the CET1, which is, of course, Common Equity Tier 1 ratio of 12%. That's down from 12.3% in March 2021. The bank pointed to a dividend payment and higher risk-weighted assets, which are up to 2% from the March quarter, driving the fall in its CET1 ratio. And just in case you're not across the concept, Common Equity Tier 1 is the core measure of a bank's financial strength from a regulator's point of view. Up next, and shares of Breville Group nosedived 8% after the company released earnings report for the 2021 fiscal year. The global kitchen appliance maker reported a 42.3% growth in full-year net profit, which was boosted by strong demand for coffee makers and mixers from people spending more time at home. Revenue surged over the $1 billion Aussie dollar mark for the very first time, jumping 24.7%. Despite strong earnings, the company cut its final dividend for financial year 2021 by 34.5% to 26.5 cents per share compared to 41 cents declared in the last fiscal year. In a separate development, Tim Antoine, a veteran merger and acquisitions banker, will take on the chairmanship of Breville after its chairman, Stephen Fisher, said he will not seek re-election after the November AGM. Moving on now to Aventus Group shares, which have traded marginally lower after the company sold the McGregor Home Shopping Centre to Sterling Property for 42.15 million Aussie dollars. The property, located in Queensland, was sold at a 50% premium to its December 31 book value. The company chief executive, Darren Holland, said that the sale of this centre is a strong outcome for the group after successfully repositioning the asset since acquiring it in 2016. The company will use the sale proceeds to pay its debt. And just before we take a look at some more shares that are in the news today, it's time for a very short break on Kalkine TV. Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on The Tech Beat, exclusive to Kalkine TV. Welcome back. Great to have your company on Kalkine TV. James Preston with you live from Sydney, and this is the Mid-Market Pulse Show. And we're taking a look at today's headline grabbers, including Charter Hall. Charter Hall's retail REIT fell nearly 2% post its earnings numbers being released. Australia's leading property groups reported robust growth in its profit, but it has lowered its distribution. For financial year 2021, statutory profit increased to 291.2 million Aussie dollars, while operating earnings rose by 9.5%. The Trust reported a distribution of 23.4 cents per unit, down 4.6% comparing to the last fiscal year. Moving on, and the share price of Monadelphous was up 0.5% after the company secured some new contracts. The engineering company has bagged a new construction and maintenance contract in the resources and energy sector, which is valued at around 200 million Aussie dollars. Monadelphous fabrications business Sinostruct has won a new 4-year agreement to supply well site equipment to Origin Energy. The company has also been awarded a new 3-year contract with Queensland Alumina to continue providing general mechanical maintenance services at its operations in Gladstone. It's also secured a 10-month extension to its existing contract with BHP Mitsubishi Alliance for the provision of dragline shutdown and maintenance services to its operations in the Bowen Basin. Shifting across now to shares of SG Fleet, which fell nearly 3% despite reporting robust earnings for the previous fiscal year. The mobility solutions provider posted a 20% growth in profit while underlying net profit rose to 41.8%. It also declared a fully franked final dividend of 5.39 cents per share. And last but not least, the natural gas producer Senex Energy saw its shares trading 0.5% higher following an update on its Atlas project expansion. The company, in an ASX filing, said the final investment decision has been taken for the 40 million Aussie dollar expansion of the natural gas production at Atlas by 50% to 18 petajoules a year. The expansion will help Senex progress towards its target of achieving its annual production target of more than 60 petajoules per year by the end of the 2025 financial year. Well, that's all for now, but keep watching Kalkine TV as we bring you the latest news and trending market updates live from Sydney. I'm James Preston, signing off for now.